Hello everybody and welcome back to another technical analysis session. This week we're looking into Green Thumb Industries, another vertically integrated MSO or multi-state operator traded both in Canada and here in the United States on the OTC markets. Pretty interesting growth trajectory here, a lot of interesting management decisions that are actually paying off this year and might pay off early next year as well. So pay attention to the fundamentals, but here we're going to dive into the pricing chart and revisit some of our old friends and see what we can see. So let's jump over now. So you'll see we're looking at Green Thumb Industries. This is the OTC ticker, it's GTBIF. We're on the Hakanashi again, so really easy to see positive and negative movements on the pricing chart. And we're looking at the 4-hour chart, so pretty quick movements. And here are a couple of our old friends, the accumulation distribution line, which is obviously a volume-based indicator, really mirrors the pricing chart overall. And what you want to look for here are divergences, areas where the pricing chart is moving up and it's moving the opposite direction. That's an obvious sign that something is going to happen. You may have a trend reversal on the pricing chart. And the same vice versa. When the price chart is moving down, if the accumulation distribution line is moving up, that would be a divergence. And it's definitely something to pay attention to. So you can see how it's pretty much mimicking the pricing chart of Green Thumb over these last couple months in 2019, which is what you want to expect. No clear divergence here. We're also looking at the AO, which is the awesome indicator. This is the difference between a short-term period and a long-term period. In this case, we're looking at 5 and 34 period lengths. And pretty easy to see once this middle line here, that's 0. Once you get crosses, the easiest interpretation is a bullish cross and a bearish cross. So once you get from positive values to negative values, here's a perfect example right here. We go from positive to negative. That's going to be a signal that pricing is going to go down. And look what happens. We were in the middle of a pricing movement when it actually went, and bam, went down. Then we had our bullish cross here, right here, and we were followed by a period of growth there. So the easiest interpretation again is pay attention to the 0 crosses. Here's another example of the bearish cross, and what happens after that? Huge price decrease. You can also interpret the red and green parts of this. Red is if the price is the difference between the 34 and the 5 period is lower. Green is if it's higher. So you can use these different change in colors to see if you actually want to exit a trade. The entrance of the trade would be during the bullish or bearish cross, bearish in this case. And here we might have evaluated getting out. If we stayed in, we may have reevaluated here. You can see amplitude is decreasing each time. Pretty clear to get out by this fourth little change in color, and that would have been quite the take, quite the profit. So use the awesome indicator, awesome oscillator, the accumulation distribution line, again to confirm trends or to identify reversals, and pay attention to green thumbs. It's lining up for a pretty interesting move here, so pay attention to when we start to see our indicator, our awesome indicator in particular, try and change direction. We may have a bullish cross coming in the near future. So thanks very much, and check out thenewcannin.com for a lot more resources and membership subscriptions.